Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Jay Pestrichelli with ZEGA Financial. And my question to you, Jay, is what's working in this market right now? It has been quite the week for equities, for sure.
Yeah, indeed, Jill. By the way, thanks for having us back. It's been volatility. Certainly, last year, selling vol was tough. This year, if you could sell volatility, you're having a decent year. You look at the indexes like, let's say, the Nasdaq 100,
right,
for example, right, has the highest volatility between that and the S&P 500 or the Russell. So selling vol has been pretty successful this year compared to, say, just the straight-up index itself, which, we're negative at this point or flat on the Nasdaq, negative on the S&P. But selling volatility generates premium and returns every month. That type of a strategy has absolutely worked.
Right, even in a market like we're seeing this week, where it has significantly moved down. I mean, what's really interesting, speaking of volatility, are you surprised the level where the VIX is right now, like 22, 23-ish, even though the sell-off that we had was pretty significant?
Yeah, so you're right. I think the VIX is a little suppressed, whereas the Nasdaq is actually showing quite a bit of fear, right? The Nasdaq Volatility Index, the VXN, is more like a 28, 29.
Right.
And the fear that's being reflected shows that there's more to come, right? The market is actually taking a step back and saying, wait a minute, there are some names, Apple, for example, which is 20% of the NDX, has got a big push and pull down on that index itself. And so there's definitely some fear, but it seems to be located only specific places. You're right about the S&P, lower VIX there. Interesting, you'd think it'd be a little higher. You've got the G20 talks coming, all sorts of things going on here, but all the volatility we're seeing, most of the fear is happening in the Nasdaq itself.
Which makes sense. Technology has really been weighing on the markets, and what's interesting with NDX, that could be a great hedging or speculative tool, as you had mentioned before. So what are some of the specific strategies, whether it's NDX, ticker XYZ, whatever you want to call it, what strategies are working for you?
Yeah, so for us, selling premium, working great all year. Pairing up sometimes some indexes when you find dislocation right now. We've seen a lot of NDX S&P kind of flip-flopping on their performance. If you take a look 20 days back, right now the S&P has outperformed the index by like 5 or 6%. And so if you could be on the flip side of that, maybe get bullish NDX and a bearish SPX pair trade, that works. But listen, those are kind of very specific trading strategies. What really works long-term is we like to talk about hedging. You and I have talked about hedging and protection for however long we've been doing these interviews together. Hedging over the long term really is going to pay off. Now, you got a year like this, up 10, then back to even. It doesn't feel like hedging has really worked. But if this was to really continue, hedging and protection using options on the S&P or options on the NDX can actually provide quite a bit of protection and let you sleep a little better at night.
Right, so you can remain invested as long as you're managing your risk.
That's exactly right. Yes, being invested is important here because we've seen all of these dips being bought all the time. Now, this last dip, the October, then the retest here in November, has been a little, okay, maybe this dip isn't going to be bought. However, historically speaking, staying long-term invested is great when you can manage your risk. Hedging lets you do that. You don't have to decide risk on, risk off. Do I go to cash? Do I stay in stocks? Stay hedged. Be invested, but limit the downside risk. And there's no better way to do that than with options.
Well, let's talk a little bit about trading psychology here, because for 2017, the market just went straight up all year. That was an anomaly, 2017. And I think traders, like investors, just have to get used to the fact, again, that markets do go up and down. I mean, we really haven't had a down market in almost 10 years. You have a generation of traders out there that have never experienced this.
It's true. It's true. People forgot why you would protect in the first place. We have people that say to us all the time, well, why don't I just buy Apple or Amazon and I'll come back in 10 years? And if you have a long-term horizon, fine, that might work out for you. But let's face it, there are plenty of years where the market is down. And we've gotten 10 without any really negative movement. But we'll get it. It's going to happen. It's natural to have a 10, 15, 25% decline in the market. Those things are going to occur. And this generation of traders, like you said, is going to have a few of those in their sights.
Right. Well, I mean, asset price resetting is a good thing. I mean, if fundamentally you still believe in some companies, I'd rather buy it 20, 25% down when that opportunity exists. I mean, it's not necessarily a bad thing. I think people connotate bearish red screens with having to be negative when it might not always be.
Yeah, there's a plus to a down market. You're right, you get things cheaper. right? This is Black Friday. Everybody's buying stuff on a
Right.
discount, right? And so the same thing can happen with stocks. One of the advantages of using hedging techniques is if you've lost less when the market's down, reinvesting while the market's lower, it's almost like dollar cost averaging without ever having to put a deposit into your portfolio.
Right.
And so you get to reinvest and end up having more shares on the way up than you had on the way down. And so you shouldn't fear the down moves, especially if you're protected and
Right.
you're managing your risk. It allows you to reinvest while the markets are low.
All right, Jay, thank you so much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.